Startups and emerging companies have the challenge of being small, not having enough resources. However, as they scale up, I think the ability to sense the right time or the right timing for transitioning from unorganized or not so well organized processes to more structured processes for decision making. I think that is very valuable.
Hello, everyone, and welcome to FaceTime with Leaders podcast, a series brought to you by Directors Institute World Council of Directors. I'm your host, Tanayol, and today we have the privilege of speaking with an accomplished leader who has navigated the world of corporate finance and venture capital for over 25 years. Our guest is Mr. Alok Bajoria, who was recently a director of portfolio management at Intel, where he had managed a remarkable $500 million plus venture capital portfolio across India, Southeast Asia, and EMEA. His expertise spans investment analysis, M&A, and driving strategic business growth. In today's episode, we'll dive into Mr. Bajoria's journey, uncover the strategies behind his success, and explore what it takes to thrive in the fast-paced world of corporate finance and venture capital. We welcome you on the show, sir.
Thank you for the generous introduction, Tanay. Great to meet you. And I'm indeed very thankful for this opportunity to talk about my career journey. And I look forward to our conversation.
The privilege is all ours, sir. Sir, with over 25 years in corporate finance and venture capital, you witnessed the evolution of the industry in profound ways. From managing portfolios to overseeing strategic investments across diverse markets, your career has been quite remarkable. So, looking back, could you share some of the most pivotal moments in your career that have truly shaped your journey and leadership style?
Most certainly. So looking back at my career, well, I started my career way back in 95, so it's almost 3 decades back. I'll probably break it into 2 or 3 parts. So the first 10 to 12 years of my career, I did treasury operations roles within the ambit of corporate finance in companies like General Electric and Intel. And I think what I learned most from those roles was the importance of attention to detail and operational excellence, process improvement, things like that. In fact, I recall one very key specific feedback I had got during my GE days that I managed to settle foreign exchange and money market transactions worth $400 billion with zero defect and 100% accuracy. And that was partly enabled by the focus on quality and green belt training in GE. Subsequent to that, I leveraged my experience at GE to set up a centralized treasury operations services in India for Intel, primarily to help the company comply with Sarbanes-Oxley regulations in the US, specifically regarding segregation of duty between front office and back office roles. The next phase of my career was a slight transition from operations focus to strategic thinking, where I got a chance to manage the credit risk for Intel's 20 billion fixed income portfolio. This was during the middle of the credit crisis in 2008, 9, 10. And a lot of learning in terms of how to keep the investments safe, moving the assets from high risk to low risk. The banking crisis was going on in the US. A lot of banks were getting downgraded. And then that was followed by the sovereign crisis in Europe. So I had to kind of manage the credit risk for that fixed income portfolio successfully. And finally, the third phase of my career would be the opportunity I got to work in the Intel Capital team, which is the venture capital arm of Intel, managing a venture capital private equity type of portfolio, which was kind of almost 180-degree different kind of a risk management profile compared to the fixed income portfolio I managed earlier, and the opportunity to subsequently be on the boards of various investee companies as Intel's board observer. So on the leadership evolvement, leadership style you talked about, I think it kind of evolved from leading via authority in my previous roles to leading via influence and collaboration. Very often I was the youngest board member in the investee companies and had to, influence management and rest of the board by looking at the common cause and the common goal for all of us in that room, and also bringing in institutional knowledge from our fund for effective corporate governance practices. So that, I'd say in a nutshell, is how my career and my leadership style has evolved in the last 3 decades.
So, managing a $500 million venture capital portfolio across diverse regions must come with its own set of challenges and opportunities. So, given the scale and complexity of such a portfolio, what do you believe are the most critical skills to navigate this diverse landscape and ensure success across a wide array of companies and markets?
Yeah, you're right. I mean, just to give you a sense of the diversity of the portfolio, there was sector diversity. So while Intel Capital is mainly a tech-focused fund, within technology, there are various sectors. For example, consumer tech, or what's called B2C or e-commerce companies. There's media, IT services, enterprise software, cloud services, and data centers. That's to give you an idea of the sector diversity within the tech sector. And then there was geodiversity. So the portfolio which I managed was spread across primarily India, Southeast Asia, Europe, and Israel. And then on top of that, there was the company lifecycle diversity. So in the portfolio, we had early stage, Series A type of companies to late stage companies which were ready to exit via IPO or M&A. So that, in a nutshell, gives you the multi-level diversity of the portfolio, which I had the opportunity to manage. In terms of some of the critical skills required to manage such a diverse portfolio, drawing on my experience, I think one of the things was to have a balanced portfolio, not having over concentration in one sector or one market, so that if there's a risk or there's a problem in one particular sector, the entire portfolio doesn't get hit badly. We had this practice of a periodical review of the portfolio performance. So every quarter, we used to get the financial numbers from the portfolio companies, and then it was the quarterly discipline to analyze the revenue numbers, the cost numbers, the cash position, and then take timely action based on those numbers. For example, if a company is doing well, is it ready to raise the next round of capital, proactively kind of engage with co-investors and other stakeholders to make that happen in the next 6 to 12 months. If the company is struggling, not scaling up, but still has potential, supporting the company through bridge rounds to get to a stage where it's ready to raise the next round of capital, and where it's not really doing well, maybe cut the losses. So, for example, during the COVID time, which was very unnatural, a lot of companies were struggling to survive, and our fund took the initiative to bridge a whole lot of companies just to keep them, help them survive and get to a situation beyond COVID, and then kind of grow when the market became normal. The other factor would be awareness of local regulations in each geography. For example, in India, Intel Capital is classified as FVCI by SEBI under the SEBI regulations, a foreign venture capital investor, and awareness of the local regulations in the other markets as well. And finally, networking with advisors and legal counsels in various geographies to keep to be aware of the regulatory compliance. So basically, constantly monitoring the political, geographical, economical trends and take proactive action to manage the risk in the portfolio.
So, overseeing such a diverse portfolio of over 100 companies must involve a rigorous process of evaluation. When you're looking at a potential investment, what are the most significant factors that guide your decision-making process? And like, how do you balance financial potential with other intangible elements like leadership, vision, or cultural fit?
Excellent. No, that's a great question. Obviously the focus is not only on financial returns metrics, but also on, these investments are long-term investments. The investment to exit cycle for the kind of venture capital investments which we did from the fund was a 5 to 10 year cycle. So hence it was important to evaluate the quality of the founders as partners in this long journey. And what I mean by quality of founders is their value system, their vision to be in this for the long term and to scale up the company over a longer period of time. In terms of the financial opportunity, what is the unique offering? What is the pain which they are trying to solve for, and what is the potential for growth and scaling up of the idea with the help of capital? Some of the other non-financial things to watch out for was to share bad news quickly, timely reporting of the MIS, and developing next line of leadership in the company. So it's the combined elements of the potential for financial returns, as well as, like you said, the cultural fit, the alignment of the value system, and to be in it together as partners for the long term. I think was some of the key things to keep in mind for the investment decision.
So, having managed a diverse and extensive portfolio, you've seen both the challenges and triumphs that come with scaling businesses. As someone with vast experience working with corporate giants and emerging startups alike, what are some of the key lessons that startups or emerging companies can learn from these larger, more established players when it comes to scaling successfully? Like, what do you think is the biggest differentiator for a startup aiming to make that leap into the big leagues?
Great. I mean, I've seen a lot of cases. I mean, I've handled a portfolio of more than 100 companies, so I've seen a whole lot of successes and a whole lot of failures. Just to differentiate between startups and established corporates, or what startups can learn from large corporates, is that large corporates have, for example, established processes and systems where delegation of tasks and decision-making becomes easier. Startups and emerging companies have the challenge of being small, not having enough resources. However, as they scale up, I think the ability to sense the right time or the right timing for transitioning from unorganized or not so well organized processes to more structured processes for decision making. I think that is very valuable. Of course, like you rightly said, scaling up is one of the biggest challenges for any business, and especially for startups. And a couple of things which the fund did to help them out was we had a business development team to assist the founders of startups in which we invested to network with CXOs of large enterprises to provide them opportunities to convert them as customers and hence scale up more easily. The other thing was a networking opportunity among the founders of the startups in the portfolio, whereby founders of late stage companies would share their scaling up stories with founders of early stage companies, providing insight in terms of how they did it, and in terms of it could be new markets, could be new products, etc. So I think the biggest differentiator for scaling up for startups which manage to scale sooner compared to others, I think, is the ability to figure out when their product market fit is not working out, and then the ability to pivot on the innovation or add another similar product line for a diversified revenue stream, which provides better scope to scale the company. A couple of examples which comes to my mind is a company which we invested, which was a data center company to start with. However, it had small data center capacity, and hyperscalers didn't find it a good fit to give business to this company. And eventually, the company managed to pivot to providing cloud services, which was less capital intensive, had provided easier scaling up opportunity, especially towards the small and medium enterprise customers, who could gain from a more valuable and affordable cloud services compared to the big three international cloud service providers, and could manage to then scale up and be more successful. Another example which I could think of from our portfolio was a company which was initially doing enterprise software for disaster recovery, was struggling to scale up. And then they added another product line through their internal innovation in the sphere of robotic process automation, which is IT services automation, business process automation. And that helped them, the second product line helped them scale up when they were kind of struggling to scale up the first product line, but that helped the company generally to scale up the revenues and the bottom line. So yeah, I mean, the ability to learn, to fail fast, to learn from failures, to pivot, and to add another product line if possible.
True, sir. And learning from something that's already worked is always helpful. So you've had a remarkable journey so far, managing a significant portfolio and working with some of the biggest names in the industry. So looking ahead, what are your future aspirations, especially in terms of boardroom roles? Like, how do you see your experience in venture capital and corporate finance shape the strategic decisions at the highest levels of business?
Right. And I've been thinking about it and reflecting on it. So the way I look at it is, I bring a good combination of finance operations experience with strategic thinking. What I mean by operations experience is things like attention to detail, operations excellence, process efficiency kind of things. When I say strategic thinking, I mean things like goal setting for the company, corporate governance matters at the board level, funding and exit decisions, exit via going public or getting acquired through an M&A process, and negotiating with strategic buyers. So I think I feel quite the combination of the operational experience with strategic thinking is of significant value in terms of my experience. The way I see myself, or before I get to that, the other thing is the experience of seeing a lot of companies failing and drawing lessons from that in terms of failure to anticipate change, lack of flexibility to adapt to change, also at times win-lose style of negotiation of management teams as opposed to win-win style of negotiation. So drawing lessons from a lot of failures which I've seen. So when I put all that in perspective and my role of reviewing the financials of companies pre-investment as a part of the due diligence process, and then subsequent to investment, quarterly review of the financials of the portfolio companies, I see all these kind of as a good potential, providing me a good potential fit for, let's say, the audit committee for a board, with a focus on, again, financial reporting. And more generally, I think my ability to contribute to strategic thinking of the board, providing strategic inputs to the board as an independent board member. And I'm also learning in terms of my desire is to learn deeper into various methodologies of ESG accounting, digital skills, in the areas of cybersecurity, risks and opportunities associated with AI, etc., to contribute to a progressive and effective board. So that's my aspiration, to kind of get into a boardroom as an independent director and contribute to the strategic process, and more specifically, as be a part of the audit committee.
So, with the growing focus on sustainability, how do you see ESG factors influencing venture capital and investment decisions in the future?
Right. ESG is an emerging concept in India. I mean, if you think of the ESG pyramid, economic viability is the first step. So I think startups care most about survival in the initial stages. There's a lot of debate and discussion going on in the AI world in terms of, let's say, the energy usage in large language models. For example, if someone looks up the internet, they can see how much energy has gone into developing GPT-3 and GPT-4 models, and hence there's a lot of discussion on sustainable computing. So I think it's definitely it's just not a passing fad, it's a very important thing. There are funds which focus on investing in startups which are working towards solutions for climate change, things like less plastic in our oceans, reusing water solutions and things like that. However, in general, I think there would be more increased awareness and focus on sustainable products and services by customers and enterprises going forward. So I think this is very important for long-term success to incorporate ESG into business strategy. And personally, I look forward, as I kind of mentioned earlier, to equip myself with deeper knowledge about ESG accounting and sustainable reporting, because this is here to stay. And I think this is obviously the right direction to go. And this will go hand in hand along with the financial performance of corporates going forward.
Yeah, I think in the future that is going to, we cannot just leave one for the other as we probably did
Exactly.
for a number of years.
Totally agree.
So, you've been a part of Directors Institute for some time now. Could you share your experience with the institute and how it has contributed to your professional growth and how its resources, courses, or network have helped you in your leadership journey?
Well, I think Directors Institute is doing a very commendable work in streamlining education on being director readiness for boards and making it much easier to equip oneself with knowledge about emerging ESG, digital skills, blockchain, AI, cybersecurity, etc., for contributing towards an effective boards for the future. So I really find that very helpful, very commendable. I've clearly benefited from the structured courses of Directors Institute, and I look forward to build on the extensive network provided by the Directors Institute. So all in all, it has been very helpful for me to kind of learn and equip myself and make myself ready to kind of be on the journey and path of being an independent director of the future ready boards in India.
Thank you so much, sir, for your kind words and for sharing your incredible journey with us today. Your experience and perspective on venture capital, corporate governance, and leadership have been truly inspiring. It's clear that your approach to strategic decision making and innovation is shaping the future of the industry, and we also appreciate your thoughts on the valuable contributions that Directors Institute has made in enhancing leadership capabilities. And so, yeah, thank you so much for joining us today, sir.
Absolutely, and thank you so much. It was a very interesting conversation, and hopefully, audience will find it of some value.
Definitely, sir. Take care.